Welcome to the Fitness Oracle, where we have real conversations with real people just like you, with real stories just like yours. And this is one of their stories. I am your host, John Katsavos. My guest today is Viren Parmar from Karma Financial. He is an independent financial advisor who has been helping individuals and business owners for over a decade in financial planning, investment strategies, and insurance solutions. He has a solid financial background, including an MBA, CFA, and life insurance, and a life license, excuse me. He has contributed to the success of individuals and businesses alike. Viren, welcome to the show.
Thank you, John.
So tell me, how has COVID been treating you so far?
It's been a challenge. It's like most people had to make changes, work from home mostly. My business involves a lot of face-to-face social interaction, and especially early on during the early stages of the pandemic, I had to put things on hold, whether it's meetings, doing any sort of business that required face-to-face meetings, signing applications, etc. It also required our industry partners, such as the insurance carriers and wealth management firms, to change their practices and allow for more non-face-to-face interactions using examples such as digital signatures, applications, etc. And of course, having meetings through technologies such as Zoom and Google Chat, etc. So it's been challenging in so many ways, but a great learning experience, and allowed me to focus on business development and other aspects of my business. But like most people, it's certainly been a challenge.
Mhm. Um, do you have any tips on somebody that you can give somebody to help them financially with getting dealing with these times? Because this could be a very financial strain on people.
Well, the biggest thing is um, cutting out, looking at your budget. Like always, understanding. A lot of people we don't do this enough. Is looking at what they spend and what they make, and sort of seeing the things that they can cut down on, those luxury items, things that they really don't need or they can do without, to save as much money, because this is our rainy day, so to speak. And so having an emergency fund built up and saving for as long as you can, it would be a great idea. um, that involves identifying, looking at your budget, whether it's yourself or working with an advisor such as myself, looking at your current expenses and your income and your net worth, what other assets you have, and kind of doing an overall review. Because this is the other aspect of the pandemic, is it's provided an opportunity to reevaluate and look at things that perhaps you may not have considered, because we're so used to things just going on and on. We're just kind of carrying on our daily lives without really, taking a moment to see where we're at, and really see what's important. So some of the things would be to look at those expenses that you don't need and try to cut down on those, whether it's eating out, gym. Hate to pick on gym, but for most people, they couldn't even work out because of the gyms being closed. But um, transportation, various things that they can do. Then when it comes to debt, looking at options to consolidate debt. If you have things like credit card, lines of credit, personal loans, that sort of thing, and see if there's opportunities to consolidate it, whether it's using some equity in your home if you're a homeowner, looking at possibly taking out some of the equity in your home, because prices in Toronto, as you know, have continued to grow and continue to increase. So a lot of equity has certainly, I imagine, built up in most people's homes, especially in the GTA. So looking at that as a solution, as a possible alternative to consolidate debt, removing high interest loans, and saving on interest costs as well. Um, of course, saving as much as you can. I don't know if you've heard this saying, paying yourself first. So a lot of times we don't do this enough is when we make any sort of income from our jobs or businesses, we don't set aside a certain amount automatically. We just kind of spend it or we put it to other uses, but we don't discipline ourselves to set aside a fixed amount to pay ourselves. What I mean by pay ourselves is setting aside a certain amount per month towards your savings, whether it's building an emergency fund, long-term retirement, etc.
Hmm. On your website, you actually say that, actually on your homepage, that you're unique. So can you talk about how you are unique to the rest of the financial advisors?
Yeah, absolutely. So we take a holistic approach, but we also provide alternatives because we're independent. We're not exclusively working with one partner or company. We can provide a lot of solutions to a lot of different people, and we provide alternatives to the more traditional types of investments and insurance products. So we will provide solutions that are not easily attainable and accessible to the general public. Things like private equity investments, investments in projects. Most advisors will generally deal in mutual funds or stocks and bonds and things like that, which is very common. But we also provide access to um, ethical investing and private equity type opportunities, real estate deals, etc., that are not typically available to the masses. Same thing as in terms of insurance and tax planning. Um, we work with business owners as well. One of our niche markets is business owners, and their needs are very different from the average person because they're on their own. They don't have benefits. Taxes are a big key in terms of planning. Everything they've got to do themselves, unlike an employee. So we work with a lot of business owners to not only plan their taxes, but take advantage of group benefits and long-term investment planning, which is a little different for business owners compared to an individual.
Yeah, we're gonna actually hit up a lot about the small business and solo entrepreneurs because I've been there too many times where it's personally where it's like everything's coming out of your own pocket. Like you're consistently reaching into your own pocket where regular employees really don't understand that. But we're going to touch up on that a little bit later. I did want to touch up on something that you actually had a discussion on your recent blog post. You were talking about personal pension plans.
Correct.
So, what are some of your best tactics on living the life that you want when you're finished working and not having to worry about money?
So is this more about, so I would say to that, once you reach a stage where you're financially free, um, where you can afford to cover your main living expenses, um, you still want to save for the future because you don't know how long you're going to live. Like, especially life expectancy in Canada is 90, according to mortality, more actuaries, I should say, which is a long time. So even potentially after you retire at age 65, for example, that leaves another 25 years potentially for you to continue living. So you would have to have enough income to support yourself for another 25 years. You'll be drawing down on all your savings that you've accumulated over your working years, whether it's an RSP, pension, TFSA, etc. But the challenge is making sure that that money lasts because 25 years is a long time, and a lot of things will come up as you age too. Healthcare costs are going to go up too. That'll also eat into your accumulated wealth. So you still need to plan and be strategic in how you invest, even in your retirement years, and think of. You do obviously have more time and freedom to enjoy the better things in life because past the years of working, which is great, whether it's traveling, um, following your hobbies and leisure activities that you didn't have enough time to focus on during your working years, or your family, or whatever. But you also still have to, it is still important to continue to manage and think about how you're going to manage your wealth even beyond retirement, because there is always a risk of outliving your money and not having enough to support yourself. And even despite having CPP and other government support, for most Canadians, it's not enough, especially depending on your lifestyle. And it's not something you'd want to be fully reliant on. You'd want to have supplementary sources of income and support in addition to the government aid that's available there. So basically, you want to plan your investments and still work with an advisor, or if you're managing it yourself, you still want to continue to, be proactive. A lot of people have this misconception that once you're past a certain age, you can't afford to take any more risks in the markets, whether it's in stocks or mutual funds. But we also don't want to have you put all your money in cash or something that's not going to grow because of the risk of outliving your money. You want to still have some exposure to risk, but obviously your level of exposure goes down as you age because of the amount of time you have left to draw on your income. So again, regardless of what stage you are in your life, whether you're young, working, middle age, or past retirement, you always want to be proactive and still be planning your financial future.
Mhm. Um, I do want to touch up on the RSP, but I want to leave that to a little bit later when we start talking about taxes and stuff. But for now, I'm just gonna leave that because that's I think that's an important one for myself and most Canadians out there. But first, what I want to do is I want to touch up on uh, effective ways of saving, especially now with so many people that have lost their jobs or are just starting to get back to their jobs because of the COVID lockdown, everything's starting to open up. What's the best way that you have found to start saving again? And has this changed since the COVID uh, pandemic?
And yes and no. In a lot of ways, it hasn't, because there's the same fundamentals of paying yourself first that apply, where any money that comes to you, you should right away set aside a certain amount, whether that's all of it, a little bit of it. That kind of depends on your budget, what your current living expenses are, because you do still need to pay some bills. With COVID, there were a lot of bills that were sort of deferred or postponed that a lot of people didn't have to deal with, whether it's mortgage, if you own a home. A lot of people were able to take advantage of the 6 months deferral with the banks that were being offered, so they didn't have to at least worry about the mortgage payments. I've also heard renters didn't have to, in some cases, not all, but landlords were able to defer or forgive some of the rental payments. Again, that depends on each situation. So my recommendation in terms of paying yourself first doesn't really change, because that kind of holds universal. Like the idea of any money that comes to you in any form, you should right away put it towards something. But the key is not to put it in the mattress as cash. A lot of people have this idea of just keeping everything as cash, hoarding it as cash, which is not a good idea because of inflation. Although it's the low in Canada compared to other countries around the world, you want your money to grow for you. If it's not growing, if it's not working for you, then you're ultimately losing to inflation over the long term. So you put $100 under your mattress now, it's going to stay $100. But in a year, that same $100 will buy less than it did today. Whereas if you invested it in even something as risk-free as as a government of Canada bond or a GIC or a high interest savings, although the return won't be great, it'll still be something, and it's better than zero. Um, I'm not going to get into the specifics of recommending because that depends on the person, their situation. But main thing is not keeping your money as cash and just sitting there. Although that is, especially in times like these, that kind of is the thinking that we don't know what's going to happen tomorrow, so we should keep everything as cash, liquidate any stocks, any exposure to the market. What we found was that although there was a drop in the markets, a lot of people were able to recover from that since the pandemic, the peak of the pandemic, and it's come back and it's steadily growing. So, whereas the people who immediately moved to cash, they did lose some value, but if they had stayed the course, they would have, seen recovery in their portfolio. Um, Again, for in terms of investment recommendations, how to save, look at your budget. The rule of thumb, there's a book called The Wealthy Barber, and in it, I'm not sure if you've read it, but it's very popular. It's a story, I won't go into all the details, but in a nutshell, it's a story of a barber who he slowly accumulated wealth over time. Despite being just a barber, you might not think he has a lot of money, but he was smart. For many years, he put aside a certain amount of money. It wasn't a lot, but it accumulated over time, and there was compound growth on it. And that money became a lot of money, and he was known as the wealthy barber because he accumulated so much in savings over so many years. So along with that, I recommend it. It's never too late to start, but I highly recommend to young people that start early, because the earlier you start, the longer growth and compounding you have to accumulate on your savings. And you don't need a lot. A lot of times people assume you need to put in a lot, or they have this idea in their head that they just can't afford to, because it's for them to reach the goal they would need to put in. I would say to that, anything goes a long way, even if it's $10, $50 a month. Um, Obviously, the younger you are, the earlier you start, the better it is, but it's never too late, because again, the markets will take care of you in terms of the growth, but that also requires you to take on a little bit of risk.
I actually have read The Wealthy Barber. It's a great book. One question I wanted to follow up with was the deferred payments. We eventually have to pay those back, right?
Absolutely. Yes,
Yeah.
so it's unlike some countries I've heard, I believe Italy, where they've forgiven the mortgage payments, from what I heard. We in Canada, unfortunately, that's not the case, where the banks are just simply giving you a 6 month break, but those same payments still need to be made up. And the banks will probably, there hasn't been a lot of information on that, but the banks will probably be reaching out to those who participated on what their new terms will be. Apparent from what I hear, the mortgage will simply be pushed back. There will be interest accrued on the 6 months of being deferred. So the interest will have been accrued, and each bank will, of course, contact the person to let them know what their options are, whether they want to pay that 6 months when they right away, or just tack it on to the mortgage and basically add another 6 months to the mortgage,
Mhm.
so that it renews at a later date. But to answer your question, yes, we are responsible to pay the money back. The bank has not forgiven the loan itself. They've just deferred everything 6 months.
Well, nothing we can say about that. um, Another point that you're talking about was cash money, like holding on to cash money. There's some really rich people out there that are telling people not to save, to spend every single penny that they have. What are your thoughts on that?
Again, I personally believe That's a bad idea. Reading, every known literature recommends some form of savings. By spending everything you have is like taking away from your future. You're consuming everything now for whatever reason. You're taking away, you're essentially borrowing from your future. So you're essentially, taking away your whatever you could have had in the future and trying to enjoy it now. And that's not a good idea because again, you risk outliving your wealth. If you have no savings, even at retirement, then you're going to put yourself at risk and rely fully on government assistance. And that is all. And a lot of people may assume that's all they need, but there's no guarantee that the government doesn't make changes, take it away by the time they reach that age where they are eligible to receive social assistance. Those programs could be gone or they could be altered. They could be less. It would be a huge mistake to assume that you should only rely on government assistance, which again is not fully sufficient to meet a lot of needs, and that could be taken away. Having some form of savings, whether it's even something minimal, is going to benefit you greatly. I'm not going to say you should save 100%. You do need to, and I certainly don't want to not enjoy life, whether it's travel, buying properties, whether it's, of course, pursuing your leisure activities or buying vehicles, whatever. But everything you buy is a depreciable asset aside from real estate. Most things that you consume are depreciable. They'll give you the temporary enjoyment at that moment, but they will either decline in value or they will be immediately consumed and it's no longer there, like food and entertainment. So you're living for, if you pursue that, you're living for instant gratification, and you're putting your future at risk.
I think I rephrased that question wrong, but I think you kind of got on that point because I was actually referring to I don't know if you've ever heard of Grant Cardone.
Yes.
He's gotten heavily into property, real estate. So he says like everything that you do, everything that you get, spend it so it can make you more money.
So spending on that. So yes. So getting to real estate, it's an investment. It's not in the sense that Grant Cardone and there's another person, Robert Kiyosaki, who's a popular figure. He's got his own books. He's known as the rich dad, poor dad person. He's also a proponent of real estate investing. That's one of how he made his fortune. Again, real estate is a appreciable asset for most economies in most cases. Of course, it can go down, but in Toronto, at least, over the last how many years, it's no matter what we hear in the news, all this fear about the bubble and all that. Everyone who's invested in real estate has made some money, regardless of what kind of property, whether it's a condo, a house, townhome, etc. So again, to your point, real estate is considered investment. When I think of spending, I'm more thinking about consuming, like where there's no return, it's not growing, it's just for the moment, it's instant gratification. Investments like whether it's real estate, stocks, anything that has potential for future growth and future return, that I consider an investment and a good use of any disposable income because it is going to bring you a return. It is helping you not only keep above inflation, keep up with inflation, but it is helping towards your future lifestyle.
Cool. So what kind of strategies would you use for small business owners or solo entrepreneurs to have something saved for their own retirement?
So there's a few things they can do. Depends also on their incorporation status too. There's when you're incorporated, your situation is a little bit different because typically your taxes are lower. You can keep most of the income in the corporation. It's also provides creditor protection. There's a lot of benefits. I won't go into too much detail about that. But regardless, there are things you can do. In the case of an incorporated person, they can do what we call a personal pension plan, where the corporation puts money towards the person's long-term pension. The corporation is getting a tax deduction for all the contributions it's making on the owner's behalf. The owner is getting to build its own retirement portfolio using the corporate money, which means they don't have to um, declare any taxes on their end and have to draw any money on their end. So it's a win-win in that case. The other option, the other thing they can do is, whether regardless of if they're incorporated or not, is using life insurance as a mechanism to build long-term retirement, where if they're incorporated or not, the company can fund the business owner's life insurance policy. If they're incorporated, they can claim the premiums as a tax write-off, and also the owner is again building a wealth, sort of using the insurance as the vehicle. So how it works is, normally when you get life insurance, most typically the type of insurance is term insurance, where you're buying for a fixed number of years and you're just buying insurance. The type of insurance for retirement planning you would use is permanent insurance, such as whole life or universal life. And what that involves is an investment component. Part of the premiums go into paying for the insurance itself, and then the other part is going into an investment account, which is growing tax-free. So it's like a TFSA, but it's all sort of packaged within an insurance policy. And so how it would work for the business owner is, the business owner, let's use yourself as an example. You're incorporated. The company would buy the insurance policy, pay the premiums on your behalf. They would claim the premiums as a deduction, but part of those premiums is going into an investment account that is growing. It's invested in things such as mutual funds, index funds, etc. And that's all tax deferred. Down the road, at some point after many years, that will have accumulated significantly in value. And at that point, you could do several things. You could borrow against the value of the accumulated value. And that way, if you don't trigger any taxes, but you can use that money to fund your own retirement. You can pay it periodically. You can draw all of it. And the idea is, and then the interest on the loan would be tax deductible as well. Or if your business is looking to expand and grow or buy other businesses, they could use that accumulated value as collateral. It's an asset. So they can use it to fund other purchases or other business initiatives down the road. And then after you pass away, the idea is whatever's left in the insurance policy will pay off the loans, and then whatever's left goes to the estate or your beneficiaries you name. So it's again another win-win situation, and it's a good way for small business owners to build some wealth and also to get some tax deductions along the way.
So this is like a fringe benefit for somebody investing in life insurance. So this is why it's so important.
Correct. Correct. Especially for small business owners, this is very crucial. The other thing to consider, this is very important in like partnerships or businesses reliant on key employees. Again, I don't mean to get into too much details, but there's a lot of insurance policies that are bought by corporations on the owners and key employees, because if something happens to one of them, the business is at risk. So what they do is they get the life insurance policies and disability as a way to supplement any loss of income in the short term, whether it's disability of the key employee or if they pass away. The business would have to continue. They'd have to either buy out the shares of the deceased owner, partner, and that can take time and money. A lot of times the partners may not have enough funds to buy out the deceased partners. So there's a lot of things that insurance can be used for a small business, in addition to retirement planning.
How much would someone have to put in to start this?
It would depend again on, so the factors to determine your insurance premiums and how much you need would depend on a lot of things. Um, how much is the value of the company, the shares of the business owner, for instance, um, your health, how old you are, things like that. So it's very hard to give you an answer of like how much you should put in, because that'll depend on how much coverage you need. Like it could be you might need $1 million coverage or 500 million. It'll depend on the size of the company. A lot of factors go in, but once you know the amount that you need, then from there it's dependent on your age, your health, how old you are, etc. Um, and then how much your company, like the budget in terms of how much it can afford, to, because obviously it needs to stay in business. So there's a lot of factors that go into it. So it's something that I would have to evaluate on a case by case basis.
Okay, fair enough. So let's say somebody's just starting out. They're starting their business. Uh, they don't, they just hear about what you just said and they want to implement they want to implement what you just said. What strategies would you use to help them get started?
Well, the first thing I would do is look at the forecast. So if they're starting out, they're new, understanding what their forecasted revenues and expenses are, because from that, it's very similar to dealing with an individual. Before creating a plan, we have to see where you're at in terms of your income, your expenses, your net worth, before we can start making recommendations. Sorry.
Fine.
So you have to look at the financial picture in terms of your expenses, your expected revenues. From there, we can then make recommendations on how much could be put towards, because we also have to factor in your expenses, like your taxes, etc. One of the things that's very important is forecasting your tax exposure, because a lot of people don't want to have to wait till the end of the year and have this surprise at the end. So having an idea, like doing a financial forecast, is very key. This will help in terms of HST planning, if you have employees, payroll, things like that, getting an idea right up front. And that way we can set aside a certain amount of money to cover things like taxes, even if it's an estimate. And then you can start even paying CRA. You have the capability of paying installments right away, as opposed to waiting till the end of the year, and filing your taxes, and then not knowing, and then having to pay a large lump sum. What I recommend is starting early, getting a head start, and having a fixed amount set aside so that you're prepared. The other thing you could do is set aside the money and have it invested in something safe, so that at least it's growing as well. Let's say you're starting out early in the year, the money you plan to use at the end of the year to fund your various tax liabilities. Um, you might want to consider investing that in even something that's risk free, so that at least it's staying ahead of inflation, because a year is still relatively long. And you do risk losing to inflation even for the short term of a year. So a lot of business owners, I recommend putting aside the money and having it invested in even something risk free for the short term, because taxes can be one of the major liabilities for a lot of business owners.
Which leads us into the next segment. In Canada, especially in Ontario, we're taxed to death. How would someone save for their own taxes if they can barely eat?
That's a very interesting and good question. It depends on a lot of situations. When it comes to business owners, it's a lot of times it's a question of incorporating or not. From the individual side, it's understanding all the different deductions and expenses are available. Problem is, it's not something we learn in school, and CRA is not one to advertise and broadcast that you can claim all these expenses that are available to you. A lot of times people miss out on a lot of expenses that they can claim that they weren't aware of when they were filing their taxes. Now, if you use the services of a professional accountant, they of course can advise you on a lot of things, but a lot of people may not have that luxury, maybe for whatever reason, because of financial reasons, so they do it themselves. It's doing your research. CRA is very good at least posting. You just have to find the website and going online to their website to learn all the deductions besides the basic personal amount, um, healthcare expenses. A lot of times, um, medical and dental expenses that are not covered by your group benefits plan, those are also tax deductible that a lot of people aren't aware of. People a lot of times assume that if they're covered by my benefits, then I probably can't claim it. But most benefits are not 100% reimbursed, so there's the certain portion that you can claim um, as a tax deduction from CRA. If you use your car for or home for your business, a lot of expenses related to your home equipment, things like that. But even just focusing on the individual, a lot of renovation expenses, dependent care, um, even health and wellness, tying in with health and wellness. There's some expenses related to health and wellness that may be eligible for a deduction because the government is encouraging a fitter country. So they've provided some incentives for people to claim that as um, as an incentive. If you're disabled, so a lot of times people aren't aware there's a disability tax credit available where if you're disabled, if you have a disability, you can claim it. You do have to get a form filled out and signed by your doctor to sign off on it to prove that you are in fact permanently disabled. But a lot of times it's awareness. It's just being aware of what's available. So I would suggest doing your research, seeking the advice of someone, a professional who does taxes, is familiar. There's a lot of literature and even videos out there that are out there for people to understand what is available out there in terms of deductions.
Mhm. Uh,
Students,
no,
even
no.
students are the interest on student loans, books, tuition, um, even living expenses, moving expenses. There's a lot of things that people are not aware of that are available to, claim as a tax write-off.
What about for the regular business owner? I mean, we're all, like I said, like we're always reaching into our own pockets. Like it's hard for us at the end of the year to fork over all that kind of money that the government wants to take from us. Do you have any tips for the entrepreneurs out there?
Yeah, absolutely. So one of the things is keeping track, and this is one of the challenges for a lot of, especially smaller business owners, is keeping track of all your expenses. There's a lot of there's I would suggest even investing in a bookkeeping software. There's QuickBooks is I believe $6.99 per month subscription. There's a lot of other similar services you can buy on subscription, and they're not too overly expensive. Um, they save you a lot of aggravation in terms of keeping track of everything, your expenses, and will link to your accounts. So your checking, credit cards, all your accounts where your expenses are going through. So it'll keep track of everything. And you should try to keep track of your expenses early on and not wait till the end of the year. You might miss out on a lot of potential tax savings. I have had clients that they weren't as organized, and so they were scrambling to find things that they could claim, and they were basing it on memory because they didn't keep track of it. Having a bookkeeping software like QuickBooks, which is interactive, it's online, you can do things early on, right from the start of the year, and it'll a lot of times automatic, like it'll sort and automatically categorize things for you, things such as travel, meals, car allowance, mileage, advertising, etc. A lot of times it cannot be automated so that you don't have to do as much work. Whereas if try to do it yourself, you'll have to do it on Excel, keep all your receipts, scan them. It can be very cumbersome, especially if you have a lot of paperwork. So the thing is to, though, bookkeep and keep track of everything early on, because at the end of the year, everything will be neatly organized for you, and you would then be able to easily and more accurately claim all the deductions that could be available to you and not leave money on the table.
Does this work both for incorporated businesses and non-incorporated businesses?
Absolutely, absolutely. Because regardless of being incorporated, there's a lot of similar deductions that are available. It's the only difference is the deductions will be claimed at the personal level versus the corporate level if you're incorporated. Um, but with the case of incorporation, you have two sets of books. In theory, you have the corporation itself, and then the person who is the business owner. They have to report what they're claiming as business income, and that will depend on what they draw from the company. A lot of times, people will incorporate and keep as much of the income inside the corporation to minimize the tax impact, and then draw any income they need just to cover their own personal lifestyle expenses. And that can be in the form of dividends or salary. So regardless, bookkeeping and keeping track of records is universal, regardless of whether you're a sole proprietor, partnership, or incorporated.
This next question, we're kind of like molding into this next question, but it's on two tiers. One is for the personal, for a person who doesn't have a business, and the other one's for the business owner. Now, the government and Canada has given a supplement to the individual. Do they have to pay that supplement back?
You're,
And
yeah.
what's the difference between a personal supplementation and the business side?
So business side is specifically for the business. This could be in the form of a wage subsidy or rent subsidy, because a lot of businesses face, because of the reduction in business, they cannot afford to pay the rent they're owing. And unfortunately, we're hearing stories already of a lot of businesses having to force to close because of the rent. Um, and so the government did provide this supplement for business owners, but it would be on the landlord to apply with the business owner for that. Unfortunately, a lot of cases the landlord didn't, and the business owner was forced out of business because of the rent being extraordinary high, and there wasn't enough business to support that. So to answer your question, there is a difference, because obviously the business supplement is specifically for business owner in terms of operating and continuing the business, whether it's keeping employees hired, engaged, or affording the rent while their business is slowed down. A lot of these subsidies actually may be forgivable and not necessarily required to be paid back, but because the government is trying to encourage the economy as much as they can, they're trying to support small businesses. In the case of the personal, though, it's a little different. Although they're provided this support, because there's a lot of people who needed it, they've lost jobs and they have no other income support. A lot of the curb benefits, actually, the curb benefit is repayable. And so you're finding that a lot of people are paying it back right away as soon as they found jobs, and they're trying to pay it back because it is something that they will have to declare as taxable income next year. It is a repayable and taxable income. So it's like any sort of income that you receive, you've got to pay the tax on it. Um, Same thing for Canada pension and EI when you retire. all those social assistance payments you receive are taxable to you. So it's not like it's free. It isn't free money. It is repayable in some form.
I actually wanted to touch up on the RSPs. I wanted to come back to that. That is our own money, and yet when it's time for us to take it out, we have to pay taxes on that, which doesn't make any sense to a lot of people.
Well, the idea, the theory, or the government's idea is that it's after tax money that you put in, and they're only taxing you on the growth. So, and you did get a deduction for it. So what is happening is, let's say you contribute $100 today into your RSP, you're going to get a tax deduction for that $100 contribution. So that was actually after tax money, but you got a tax write-off now. But the idea is you're going to pay it later. So you're just deferring the tax later, because that $100 came from your income that you already paid tax on it. In using an employee as an example, employees have to pay source deductions when they receive their income. Normally, that is taken off of their pay right away. What's happening is that $100 you put in, part of that was tax. You could have potentially paid, you could have earned a gross 130, but let's say $30 was taxed, so you got $100, and you put that $100 into your RSP. What the government is doing is giving you the $30 as a tax deduction. You have to declare the 130, the gross income, but then you get the $30 back because you contribute to an RSP. But then later on, you're going to take that money out. You're going to have to pay. Essentially, you're paying the $30 back because the government lets you not pay the $30 today, but in exchange, you have to pay later down the road when you're 65.
Wouldn't it make more sense to put it into like a mutual fund or a stock or a dividend or something like that?
Well, it depends on the reason. A lot of people want to take advantage of it because of the tax liability. So it depends on your tax situation. If you're in a higher tax bracket, it would might make sense because what happens is your tax bracket gets really, or tax rate gets really, really high at the higher tax brackets. It's sort of exponential almost, where at the highest, it's almost half of your income. Half of your income is going to the government. So if you're in the higher tax bracket, you're looking for any opportunity to save that tax now, in theory, because when you're 65, you may not be in that high tax bracket. So you're willing to fork over the tax later because the tax rate when you're in 65 or drawing on your retirement will be a lot lower. So in effect, you may have actually netted a positive gain over time. On top of that, you've compounded the growth. So whatever money you put in now is accumulating tax-free. So the theory is, and the reason they set this up is it's very beneficial for people in the higher tax bracket. For people in the lower, you're sort of indifferent. If you pay the tax now, you're going to pay it later, and so there may not be much of a gain. So, like you said, you could put it in a TFSA or an open account where you pay the tax now and you don't have to worry about it later because the tax is going to be the same later on. It's really beneficial again for people who are in the really, really high tax brackets.
Mhm. How would you specifically help a self-employed person to plan for his or her finances in the future?
A self-employed person.
Self-employed person.
So the challenge for self-employed is you're doing everything yourself. It's so much easier as an employee because you get a T4 and everything's taken care of for you. Your deductions are there. Everything is written out for you, and you just fill in. If your taxes, you fill in the T4, and everything for the most part is pretty simple, unless you have other things going on, whether it's investment property and other types of activity that requires sophisticated tax planning. For a self-employed, you have to you have to claim all your expenses yourself. It's on you to be on top of what you can claim. So this goes in line with what I was saying earlier, where do your research, learn as much. The CRA is actually very good at providing resources for self-employed people in terms of resources on things like when to incorporate and when not to, how to incorporate. They give you a very detailed um, explanation of the resources available, registering your business, when you need to consider registering for an HST number, the limits and that sort of thing. Um, but again, the key is to plan ahead, understand your budget, your expenses, what's deductible, what's not, investing in accounting software, because from there, then you can start to determine how much you can put aside for your taxes, um, investing any excess corporate savings that are in the corporate account. Because the other thing that's available to the corporation is the corporation can invest on its own as well. There are investment accounts available for corporations. Planning for the personal pension plan I mentioned earlier. Once you know how much you're drawing as salary income, what the budget is for the corporation, you can plan for how much you can contribute to the business owner's pension and things like that. All of this again requires an understanding of what the finances are at the beginning, having an idea of what the revenues are, what the expenses will be, a forecast of the net income, because from there you can then set aside a certain amount for investing, and if you do insurance or other types of investment planning.
This is okay. Because as a, business owners, they have to wear a ton of different hats when they're running their business, especially at the very beginning. You're wearing every single hat. You're the employee, you're the marketing specialist, you're the advertising specialist, you're everything. Do you have like a cheat sheet? Because like pulling yourself away from something that could potentially make you money to stay in business or grow your business, and going to like the CRA website to go see and hunt through their website to see, okay, when do I do this, when do I do that? Do you have like a cheat sheet somebody could just say, okay, at this point in my business I need to do this?
Right. Yeah, absolutely. I do have something like that I can share sort of with the listeners offline, a document I can share that kind of gives you sort of the quick ins and outs of the things you should consider. What I would suggest though is working with advisors and experts, because as you said, the business owner has many hats, and so they don't have the time, but at the same time you could be leaving money on the table in terms of tax liability by not planning ahead of time. So it's a combination of doing certain things, putting in place certain practices, but also working with any advisors, anyone you know, whether it's an accountant, bookkeeper, or a financial advisor, just to help with the initial setup. There are advisors out there that will consult. They'll literally, that's their specialty, is to work with startups and companies that are new and provide you a sort of like a package of things to do and set up, a turnkey approach to incorporating, all those things like a do-it-yourself kit where a person can go to without having to do a lot of research and fact finding, because for the reasons you mentioned.
Do you do something like that? Because I'm going to list all your links in the show notes so everybody has easy access to you and your company. So do you have something like that?
Absolutely, yes, absolutely, and that's one of the things we advise on. Now we work with partners that can provide more specific expertise in certain areas, but absolutely, we do advise small businesses on proper planning, proper setup of the organization at the start, even assisting in obtaining financing and funding A lot of business owners we speak to, one of the challenges is also getting funding for small business growth. So they're at a stage where they need money to take their business to the next level. There's government grants. Aside from business loans and equity, there is government grants available. But the challenge is knowing about those programs because the government does not openly advertise them.
I know I've looked. They don't make it easy. They don't like giving money away. What's one tip that you could give a business owner or a self-employed person to help them recover from the whole COVID debacle?
Um, so again, it's very similar to an individual where um, take advantage of as much as you can of the grants and subsidies that the government is offering. And there is maybe more that you're not aware of. Seek an advisor, a specialist who is knowledgeable in those areas, because it is a lot of research. A lot of times, business owners, it's not easy to understand how to apply for those grants and subsidies. And if you do come across challenges where the landlord, for instance, is not supporting, there are other avenues you can pursue. Um, it is, of course, important to save for that rainy day fund. So save as much as you can and not put it in all in cash. Not saying put it in the markets necessarily, but even for something short term, um, putting it into something like you know, a marketable security, something liquid that's risk free, just so you're staying ahead of inflation and putting aside money because you may need it. And but at the same time, if it's possible and feasible for you to continue operating, try to do so because things are turning around, and I'm very cautiously optimistic. But there's a lot of businesses that are still fearful of going back in business. But I would say not to be fearful. Try to take advantage of the grants and the opportunities available. You may have to take on certain practices in terms of social distancing, um, limiting customers, depending on the type of business you run. But it may be worth it, but you have to consider it. But you also have to look at what the cost benefit is. Does it make sense for you to stay inoperative versus operating? What are the risks? Um, I guess I would say look at it, talk to an advisor, see whether it makes sense for you to continue business or not.
Switching gears a little bit, but it is kind of, I think this next line of questions are really critical, especially during these times. What is critical illness insurance?
So critical illness is a living benefit that pays when you suffer any known defined critical illness, hence the word critical. So an illness that is life-threatening. This could be cancer, stroke, heart attack, diabetes, that could leave you critically ill and risk loss of income. It's highly recommended to almost anyone, whether you're self-employed or working for a company, because it's not something that's provided by most group benefits plans, but it's often ignored or unknown. Most people are more familiar with life insurance because it's more widely known. It's, of course, where your beneficiaries receive a certain lump sum if you pass away. Um, Critical illness is a situation where it pays you, the person who is obtaining it, a lump sum benefit to cover for short-term needs, whether it's medical bills, loss of income, etc. Most cases, when you suffer an illness like this, the argument could be that you will get some sort of disability payment or from CPP or your group benefits plan. The amount of money, though, may not be sufficient to cover your illness or your hospital bills and other expenses that may have incurred, because some of these illnesses can be very long and very um, expensive in terms of hospital bills and time. If you have spouses, Your spouse may have to take time off from work to take care of you, for example. Then there's childcare to consider. So critical illness is something that is very important but often overlooked, and very crucial to add to your financial planning needs. And it could be as little as a lump sum benefit of 20,000 to anywhere near 100,000. It could be even more. It's also important for the business owner, even more so because business owners um, have no benefits, and typically the business is dependent on the business owner. So if you're using yourself as an example, if you're something were to happen to you, your business will suffer. Your business cannot continue because it's dependent on you, the person. And so if you become critically ill, you're going to rack up some bills. But if you have some sort of insurance in place, at least the insurance company can provide the business some sort of supplement that it can use to continue going, whether it's paying employees, whether it's paying the utilities, the rent, etc. That's another thing that a lot of people, especially business owners, ignore. And in certain cases, it can be tax deductible, the premiums that are paid on those policies.
This sounds like something that big corporations and big companies can afford. Can a small business owner or a solo entrepreneur or just a regular person buy into this?
Yeah, again, it depends. The cost will depend on the age, your current health situation, and how long you plan to have it for. There are plans available that are inexpensive. Of course, the earlier you obtain it, the better. Like anything, the earlier you start, the lower the premiums. But it's not unusual for someone even middle aged to still afford a small critical illness policy. It could be as little as 20,000, and that could be just sufficient for a lot of people. It's a situation where something is better than nothing, because there will be rainy days, and um, unfortunately, as we've learned from COVID, nothing is certain. Anything can happen, and it's better to be prepared than not be prepared.
Totally agree with that. Um, so, what are some of the benefits that someone can see from this, and how does this differ from OHIP?
So a lot of those costs mentioned in the healthcare are not covered by OIP, unfortunately, and that's where people then get into financial difficulties. It could be surgery, it could be a specialist, it could be some form of treatment, because OHIP can only cover up to a certain limit. There's certain limits within OHIP, but your illness could be so severe that it requires a specialist or some sort of extended long-term care. So the idea of critical illness is to provide either not only supplement but provide coverage for that, so that you don't have to take out equity in the home, incur some form of debt. And even if you do draw on loans or debt, those things can take time. It's not like you receive the cash right away. It can take time for you to receive the cash and settle that. And then after it's all settled, you now have more debt on your hands. The idea of critical illness is, instead of having to fund those expenses through borrowing, let the insurance company pay for that. And there are policies, there are situations you can set up where, for whatever reason, you never have to use that. For whatever reason you're perfectly healthy, there are riders you can add to the policy where you can receive your premiums back if you never have to use the policy. So it's called return of premium. It's also applicable for disability insurance, which is also very applicable for self-employed individuals, because their earning ability is their biggest asset. So disability and critical illness are very commonly used to provide support for that.
Mhm. So we're going to be actually one more question before we start wrapping this up. COVID, if somebody gets sick with COVID, is it covered under OHIP or is it covered under the critical illness?
Well, again, there's until now, of course, insurance companies have not specifically listed COVID as a critical illness. So it's kind of assumed that it's going to be rewritten. So that's the other thing to keep in mind is a lot of insurance companies will now have to update a lot of terms. But people who have already got existing coverages do not have to worry because they're going to be paid regardless of whatever the situation, because insurance companies cannot go back and retroactively change existing policies. But to answer your question, OHIP would be the first thing we would look to. Anything that's covered by public health would be the first, I guess you could say, line of coverage we'd look at. And then critical illness. See, the thing is, critical illness will pay you a lump sum benefit. It's not going to look at whether you have existing coverage. So using yourself as an example, you suffer a critical illness and you've got this policy for 50,000. As long as you meet the definition of the critical illness, whether it's a heart attack, you suffer a heart attack, the insurance company is going to pay you the 50,000 regardless. They're not going to look to whether you received or are eligible for OHIP coverage. Even if you did have that covered, it's going to pay you the 50,000 regardless. That's what you're entitled to. You can, of course, choose to only receive partial payment if you feel that you don't need it. You do have that option from your side, but the insurance company is obligated to pay you the full amount that you're entitled to, and they're not going to look at whether you're covered by OHIP or not. It's not like using example of WSIB or disability insurance. A lot of insurance companies for disability will look at whether you're receiving WSIB if you suffered injury on the job, or if you have health and dental benefits, whether any of that's covered. Before they pay you, they'll pay you the net. Critical illness is a fixed lump sum payment that gives you the money regardless of what the underlying situation is.
I find it hilarious that your insurance companies don't see the as COVID-19 as a critical illness. They should take a walk in the ICU, maybe. I think they're going to change their minds.
I think it's one of those learning aspects. Even with their practices, a lot of companies have had to adapt their practices, which they've had for many years. A lot of them are still using paper-based applications, for instance. They haven't necessarily got on the board of doing everything digital, but because of COVID, a lot of them have adopted e-applications, digital signatures because of the risk of having face-to-face contact with people. But what I foresee is they will be updating their contracts going forward for any new contracts, but they haven't. There hasn't been a specific mention of them putting in place or mentioning COVID specifically, but that will probably be something that will be coming forth very soon in the near future.
Mhm. So now we're going to be wrapping it up. So I asked these questions to these 7 basic, easy questions to all my guests to get their input on like who they are and everything. So with the increase in people suffering from depression from the lockdown, what would be the one thing that you could tell them to keep their hopes up?
Well, to keep their hopes up is that our country has been a good leader in terms of handling, and we've done well in terms of reducing the number of cases overall. Our economies have already started opening up across the different provinces, and especially in Ontario. Encouraging thing is we've done well compared to other countries, including our neighbors down south. We're in a lot better position than others. So it's encouraging to see that things are already turning around. Unlike the beginning where we weren't prepared and we had all this chaos, using example of toilet paper, we're running out of toilet paper at the grocery stores. We've come a long way in a short period of time. Our government has stepped up, despite what you hear in the news, all the criticisms and whatnot. we have done well overall compared to other countries in the world. We've reduced the number of cases, and the cases have gone down compared to other countries. I would say we've flattened the curve. So I'm very optimistic about how we're heading. I would say to keep your spirits up and encourage everyone to still go out as much as possible, but take precautionary measures as much as possible. Social distance ourselves, do the things that our government recommends. But there is a lot of room for encouragement. Just look around us. Things have opened up. We've reached stage 3 in Ontario, and it's a matter of time before we are, reaching full stage 4. That may take a little bit more time, but we're on our way there, and we've already see it in other provinces. They've reached stage 4 a lot sooner. So I would say to that again, look at what's around us. Everything is opening up, and it's encouraging.
Mhm. Where do you see Karma Financial in the next 5 years?
I would say we will be an industry leader. We will continue to grow as we are doing now. You will see more and more of us in the news and in social media. You may see us again. You might hear from us again and talk about other aspects. Who knows? Um, but we strive to be the industry leader, the go-to, the familiar name that anyone thinks about when they consider whether it's insurance, um, tax planning, wealth planning, etc. So we will continue to grow, and you will see more and more of us in some form or another.
Awesome. What about you personally?
Personally, I will. My long term goal is to be semi-retired, where I am able to do things remotely. I mean, I am sort of doing things right now with COVID, but my goal is to travel the world more, explore the cultures around the world more, and travel and have more experience to share with people, have more interesting stories to tell, and have more experiences out around the world. Especially with COVID now, I'm more and more excited to get out and travel because of the restrictions we have in terms of travel. Um, Learn and continue to invest in my own personal health and wellness. I take health and wellness very seriously. So I currently train on my own, but I do want to be doing that continuously and reach a stage where I can cycle long distances. That's one of my personal goals. I currently I've cycled a little bit, but I want to be able to cycle to Niagara Falls from here and back. That would be one of my personal goals.
Nice. So this is not part of the questionnaires, but it's just a follow up because I'm curious because I love traveling myself. As you can tell, I've been to Thailand. I've been last 5 years. I've been to 9 different countries. What's your first stop at once the restrictions are lifted?
My first stop actually will be Morocco. It's just one of those places I'm curious to explore. It's very unique culture. It's part of North Africa. I've been to North Africa before when I went to Egypt, so I just wanted to explore another country in that region. And I know some friends I've made during this COVID time through virtual remote technology. So I'm actually curious just to meet them. But from what I've read and seen, it has a very unique culture. It's in North Africa, but it has a very European-esque culture there. But they have very nice beaches, and I'm anxious to explore the nice beaches over there.
Yeah, I've heard it's a very interesting mix. It's a very interesting place to go to. I've never been there. That's actually on my bucket list. But if you could pick up the phone right now and call yourself at 20 years old, what would you tell yourself?
I would tell myself when I was 20 to enjoy life, like not to take myself seriously. It is good to have goals and ambitions, certainly, but everything will happen, and to be patient. Um, it's important to be balanced. it is good to have drive and ambition, but you need the balance. And so don't miss out on, like, do as have fun at the same time, and don't take life too seriously. There's opportunities will come your way, and it will, everything happens for a reason. I don't believe in randomness. I believe in the law of attraction, and that everything comes to us when it needs to, but we have to be in a position to receive it.
Looking back, would you change anything?
I would change the fact that I did take things too seriously early on. I felt that I was under a time limit, that I needed to get a lot of things done in my early 20s. Whereas if I just took things more easily, or pace myself, and try to experience other aspects of life, that would have been better, because you learn and you grow in many ways. And not to be just driven, because drive and ambition, while it's good, it can kind of take you away from a lot of other aspects of life, whether it's travel, worldly experiences, etc.
What keeps you up at night?
My What keeps me up at night is growth, personal growth, constantly learning, figuring out what to do next to improve myself. I'm always about personal improvement.
Nice. Where can people find more about you?
So they can find me on my website, karmafinancial.ca. I'm also on LinkedIn under my name, Viren Parmar. I'm also on Facebook. I'm very easy to find. I'm not actually very hard. I'm very active on social media. And as I mentioned on my website, um, I believe you're going to be sharing the links after as well. So the links will be provided, but they can reach me any many ways possible on social media. I'm everywhere.
All right. Yes, we will be posting all your links with the show notes and on my face on my social media sites as well, so everybody has access to you and easy access to get a hold of you. Um, Vern, thank you so much for coming on the show and sharing all this very useful information for the people out there. I know they're suffering and they're probably not sleeping at night because, like I said before, they don't even know if they're going to have food for tomorrow because there might not be a job for them. So I appreciate you for coming on here, and I appreciate you for sharing your knowledge with us.
It's my pleasure. Thank you for having me. And again, to say to everyone, please stay positive. And we are getting through this. Our government is one of the best in the world, and they are, despite what you hear in the news and the criticism, we still have the best country in the world, and we have done well. We've come a long way. Have faith in that, and things will turn around. And for a lot of people, it already started to.
And with that, going through hard times is just a test. What you need to know is that when you get out of whatever you're going through, you will be stronger than ever before, and you don't need to go through it alone. Always know that you are not alone. Stay tuned for more real people with amazing stories just like yours. Until then, to everyone out there listening, I wish you a good morning, good afternoon, or a good night wherever you may be in this crazy world.